guys, welcome back today. So today's going to be less of a live trading and setting up indicators video and more of an educational video to give you guys a little bit of maybe insider knowledge, a peek behind the curtains on how some key things work in the market that might be able to help you step up your game. So what we are going to start with, we're going to cover about three things in here. We'll cover the S&P 500 and Bitcoin and some other tech stocks. We're going to cover trading the Asian market, which is day trading at night basically. And then we're just going to go over a few other things, just good to know that might help you be a more successful trader. So let's go ahead and start with how the S&P 500 and tech and ETF stocks move Bitcoin. So in case a lot of you don't know, Bitcoin is not a free-floating entity, out there in the abyss. What drives Bitcoin price movement is certain stock categories. And that is because the big money that is behind a lot of these very large stock ETFs and portfolios is the same big money that is behind Bitcoin. So they tend to have overlapping portfolios, and therefore one affects the other. So there is a growing correlation between Bitcoin and the S&P 500. And basically, historically and quantitative correlation has been happening since around 2020. So it took a while for a lot of Bitcoin to get into private money, large hands, and line up with their portfolios that they had of stocks. But around 2020, that's when that started to happen, and Bitcoin's correlation with equities has turned positive, with rolling 30-day correlations often hitting 0.5 and occasionally 0.7 moves in correlation. Specifically tracking some big moves in 2024, the compounding gains were roughly 24% for the S&P and 135% for Bitcoin. This is just last year. In 2023, it was 26% gain for the S&P and 147% gain for Bitcoin. In 2022, there was a 19% drop in the S&P and a 65% drop in Bitcoin. So it amplifies the moves up or down. Kind of like how altcoins moves off Bitcoin are amplified. Bitcoin might stumble 10% here or there, and altcoins will just roll down the hill 20-30%, right? And that's why everything rolls downhill. So the rolling correlations have most recently been strongest since 2020. Like I said, they average around 0.4. So some people still don't understand why they move together or why the S&P kind of correlates to Bitcoin's price. And that is because the stock market largely reacts to macro shifts like interest rates, inflations, and liquidity, and Bitcoin also reacts to those things, right? And as we just talked about, as more institutional adoption happens and more institutional investors and big private money hold both, the portfolios will begin to align closer, and one will move the other one more and more as the years go by, because they'll have a lot of Bitcoin and a lot of stocks. And let's say the stocks are doing bad, they're going to sell off what they can, take the loss and put it in Bitcoin and recover that money. Or Bitcoin's doing bad, or Bitcoin's doing really good, they'll sell off some and level out their stock portfolio. And because that happens, because it's large money in private hands, those sellings or those buyings of Bitcoin or stocks pushes the other one. Common macro drivers, if we're talking macro economies, of force, being that the U.S. is the largest crypto consuming nation on earth, the price of the U.S. dollar also factors in. And as the price of the U.S. dollar fluctuates, sometimes Bitcoin will also fluctuate with it. That isn't constant though. That's just for like when there's big forex shifts, you can see the reaction. So again, the S&P is the biggest price mover for Bitcoin, and the prices are amplified. Now, other big movers of Bitcoin in the stock world are going to be technology-focused exchange-traded funds, ETFs, right? Some notable ETFs that have shown historical quantitative data to moving Bitcoin are going to be such big ETFs as the Invesco QQQ Trust. Right, this tracks the Nasdaq 100 index and it encompasses a lot of major stock companies like Apple, Microsoft, and Nvidia. And Bitcoin's correlation largely tracks with tech stocks, especially those in the Nasdaq ETFs. Another technology sector ETF is going to be the SPDR fund, which is the Technology Select Sector Fund, XLK, and it focuses on large cap U.S. technology firms. Bitcoin's price movement often aligns with these tech equities, especially during periods of economic uncertainty or shifts in investor sentiment. For the QQQ, being that it's NASDAQ, oftentimes it's synchronized with macroeconomic events, and they will, again, like the S&P, be intensified when they reflect in Bitcoin. Another very big ETF is going to be the Vanguard Information Technology ETF, or VGT. It offers broad exposure to the tech sector. Institutional investors often treat Bitcoin similarly to these stocks, leading to synchronized trading patterns with this particular ETF, especially during macroeconomic events. And the last one that's going to be a big mover for Bitcoin is the ARK Innovation ETF, ARKK, which is managed by Kathy Wood. This ETF invests in disruptive technologies, including companies like Tesla and Coinbase. ARK's performance and investor sentiment can influence Bitcoin's price, given that there is significant exposure to the crypto sector from within the investors in that, right? The large investors in ARK are also generally large investors in the crypto sector. Those overlap quite well. Again, factors driving that correlation are the institutional behavior of, investment, funds, and large private money and large, public money, but mainly private money hands. BlackRock, Vanguard, all these guys managing these large funds have the ability to move the market. Macroeconomic events that they often respond to are such things like interest rate change, inflation. They can also, and those two things directly impact tech stocks, and that again reflects on the broader financial market and Bitcoin specifically. Again, like I told you, they use it to balance their portfolios through like a risk-on, risk-off sentiment, where both Bitcoin and tech stocks are considered risk assets. So during risk-on periods, investors are more willing to invest in these assets, while risk-off periods see a retreat to safer investments. So understanding where the market is can often help you get in at good entries for gains when the market recovers. So do be on the lookout for those, and I will list them in the description if you're looking to expand just your overall broader knowledge of market sentiment and how all of these things line up. Next, we are going to be talking about night trading the Asian markets. It's a very lucrative thing to do if you can hammer down the nuances. Basically, sorry, I had a sneeze there. Basically, the Asian markets mimic the U.S. markets from the day before to the current day. I know that sounds confusing. So before we dive into it, let's say that today's Monday, but okay, so let's just say it's Wednesday. Okay, Wednesday, and we're waiting to trade the Asian market. The Asian market opens at 8:30 Eastern Standard Time for me. Again, we'll get into all this. I just want to try to lay down a basic understanding. So on Tuesday, the American market closed low, right? So we closed lower than open, and so because in today's market we trade and we close high, right? So when the Asian market opens today, they're still holding their bags from Tuesday, right? Because it's morning there. It's going to be morning there when we start trading at 8:30 here. So we're going to look, because we closed low and closed high here, we're going to be looking for a sell-off, right? The Asian investors are going to want to take profits, so we would look to be buying a short right before the market opened, probably knowing that the Asian investors are probably going to take a short and take their profits. Okay, now let's say that on Tuesday we closed high and today we closed low. We're going to be looking to take a long because of the low prices here. The Asian investors are going to want to be able to buy to increase their bags, right? Increase their holdings. So we would take a long. Now that's not always how it is, but quite often that is how it plays out. So to get into a little bit deeper understanding, trading crypto futures on the Asian market by leveraging movements in the American market is a strategy, like we talked about, that does capitalize on the 24/7 nature of cryptocurrency markets and the time zone differences between regions. So as I said, the Asian market opens at 8:30 p.m. Eastern Standard Time. Now they do have early trading, so occasionally you can get in. You'll see price movements before 8:30. Right, like sometimes around 8:20, you'll start seeing action. And then, we're off to the races. Now, I try to trade in the middle of the day generally for trading the American markets. Like, I like to trade from 10 to like 2. I think that's when the best action happens. And because of that, I like to trade about those 4 to 6 hours on the Asian market as well. So I'll start trading the Asian market after I take that long or short. I'll give it time to settle out, figure out what it's doing, and I'll get back into trading from like 9:30 to like 1:30 or so, 2:30, which would correlate to the mid trading hours on the Asian market. So again, you can see reflections in the sentiment depending on how the day before's market closed and what today's market did. You always have to look at the day before and today's to figure out what might happen when the Asian markets open. Studies have shown increasing correlations between cryptocurrency prices between traditional equity markets in both the US and Asian markets. So now you also do have to keep up with economic events that are global and economic events that might happen per se in China specifically, as they're a very large portion of the Asian market, and trade accordingly. We're still trading the candles like we would here, but we are trying to get that free long or that free short early on in the market. And if you take a look at this picture I'm going to put up, you can see what I'm talking about here. The previous day the market had closed low, and that day it had closed high at the close of the American market, and then the Asian market opened and we took a short. So that is just a way that you can up your game and try to get in some profitable trades that you can rely on, more often than not. Again, always do your due diligence, but I look forward to it, guys, and until the next time, I hope you learned something and can increase your trading knowledge.